Our point of view, 5-year time horizon, nothing has changed except the price.
So, Jim, does that speak to you?
Nothing has changed except the price. When I listened to that interview, which was quite good, I thought about a head coach for a Southern NFL team who, at halftime, was down 21-0. And he started his speech to his team saying, "We've got them just where we want them." And I remember saying, "Why did you say that?" He says, "I don't know. It's like the most stupid thing you could say." Well, when you're down 30% and others are up, I guess you got them just where you want them, David. Another thing I don't approve of is she used a lot of the stocks I regard as incredibly volatile in the NASDAQ. She uses as what she called, but basically what cash equivalents.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So grab your popcorn, kick your feet up and enjoy the show. Jim Cramer and Cathie Wood have got beef. Well, at least when it comes to investment strategies. In this video, I'll be reacting to comments from Jim Cramer, who vehemently disagrees with some of the approaches taken by Cathie Wood and ARK Invest, and I'll share my thoughts and opinions. So let's get into the video. And by the way, since I know there's a lot of crypto lovers watching and people who like free stuff, it's your lucky day. For a limited time, you can get up to $250 in free crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. It also helps out the channel. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
To your point, Jim, about the difference between people's longstanding beliefs about the trend versus what's happening to the price shorter term. It's something that Cathie Wood brought up on her appearance on Closing Bell Friday, and it kind of ties in with the general sentiment you're pushing. Take a listen to what Cathie said Friday.
I love this setup. The last time I was on, I think I said that this rotation was good news because it meant the bull market was broadening out. It was strengthening. And the worst thing that could have happened to us is to have the market narrowly focus on just our ilk of stock, the innovation space. Instead, it has broadened out so that year to date, I think it's energy's up 40%, financials are up 27%. Our point of view, 5-year time horizon, nothing has changed except the price.
So, Jim, does that speak to you?
Nothing has changed except the price. When I listened to that interview, which was quite good, I thought about a head coach for a Southern NFL team who, at halftime, was down 21-0. And he started his speech to his team saying, "We've got them just where we want them." And I remember saying, "Why did you say that?" He says, "I don't know. It's like the most stupid thing you could say." Well, when you're down 30% and others are up, I guess you got them just where you want them, David.
Well, it does give you an opportunity to buy even more.
Now, is it just me? Or do you guys get the sense that Jim Cramer's poking fun at Cathie Wood while the ARK Invest ETFs are temporarily getting absolutely crushed as people panic sell out of tech stocks and disruptive innovative names?
Yeah, oh yeah.
If you believe,
a lot,
as she believes.
She probably buys the trade desk today. That's down
completely
substantially.
Believes. Yeah, we haven't taken a lead. Well, we're still talking about Cathie. I don't actually have her trade sheet today. Usually I have it from seeing what she bought from Friday. No, I know. I don't have it in front of me.
Well, look, I mean,
it doesn't mean, listen, over time she has had the best performance.
5 year.
And if she
well,
continues
that was then and this is now.
David there trying to talk a little bit of sense into Jim Cramer and saying, hey, Jim, a little bit of perspective, my friend. If you zoom out to more than the last 3 milliseconds, you'll see that ARK have absolutely been slaying it over the last few years. In fact, they've killed it over the last half decade. Some of the best returns of any ETFs on planet Earth. I think this exchange really speaks of the short-term nature both of the financial media and also Jim Cramer. This is like these same douche lords that are like, ha, Tesla stock's down 30%. Failing to realize is that if you zoom out over the last 5+ years, it's up about 10x. So, there's that. It's very easy for investors to get caught up in their emotions of the present moment and forget to have that perspective. And I don't think Jim Cramer is helping the cause here. I mean, kicking somebody while they're down who's got some of the most incredible results of all time in ETFs, ARK Invest, is just strange to me. Let's have a look at the performance of the ARK funds over the last 5 years. We're looking at the ARC genomics revolution, and we can see over the span of the last 5 years, it's up 364%. Sure, from the extremely recent peak, down 30%, but again, that is a total lack of perspective. Now we're looking at the ARC Innovation ETF, ticker ARC-K, and again, look at this, up almost 500%. That's basically doubling every single year. Of course, again, down a little bit over the ultra short term, down about 30%. But again, this is absolutely no perspective. Look at this. We're talking about a span of just a couple of months. But wait, there's more. We're now looking at the ARC Autonomous Technology and Robotics ETF, and what do you know? Up over 300% in the last 5 years. And yes, of course, also down about 20 or so percent in the last couple of milliseconds. Big deal.
Okay, yes, true. Good.
They're killing these stocks. Yes. They're taking all the air out of these stocks, and including her relatively unknown stocks. Now, they can come back. Carl, the 5-year that's terrific. And I hope that the people who are in there, Carl, have a 5-year perspective, because I think they will do quite well. But right now, there are people who expected a 5-day return.
What? Who in their right mind, in fact, who in their right or wrong mind would be investing with a 5-day time horizon in disruptive innovation, which by its very nature is extremely volatile? I mean, let me know in the comments below if you guys know anyone who's foolish enough to think that they're investing and be looking at 5-day hold periods on any stock. Like, actually, who's Jim talking to here? Are there people out there that actually do this? Seriously, let me know in the comments below. I don't think anyone in their right or wrong mind would be investing in this stuff thinking, oh yeah, 5 days, that's a safe time horizon. Nothing can go wrong there. It's definitely not going to be a chance that these stocks are down 10, 20, 30+% over that time, is there? Am I from another planet, or is Jim? Or are we both?
Which is what she gave you. And that's struggling, including the man who was on Saturday Night Live, whose stock, as much as I love him, and he did say that he's like what did he call himself? What do you expect, some kinder, gentler, chill guy? But I mean, Tesla's not been a great stock.
Excuse me, waiter. Yeah, can I have what he's smoking? Thanks. Okay, let's get ourselves some perspective here. We're now looking at the Tesla stock price chart since IPO in 2010, approximately 11 years. If we run from the IPO up to the present moment, Tesla stock is up almost 16,000%. Maybe that's being generous. Maybe we start in 2014. Tesla stock up over 1,000%. Maybe we'll start in 2019. Tesla stock up over 1,000%. Maybe we'll start in 2020. Tesla stock up over 200%. Maybe we'll start in mid-2020. Tesla stock up over 100%. Oh, Jim, are you referring to the last 3% of the entire time horizon? The first few months of 2021? Perspective, Jim. Perspective. Please, perspective. So for about the last 3% of Tesla's time on the stock market, it hasn't shown growth. I mean, do we expect stocks go up every single month of every single year forever? It's not how it works.
These things all worked for a period of time. And now, Carl, they're not working. You got to be a new core. And these people don't new from core.
Yeah, except that if history's any guide, Jim, it's over time, that won't be the right trade. I mean,
well, maybe they're the next Google and Facebook.
New core?
No, not you. No, I'm talking about Woodstock. That's what I call them, by the way.
Who?
Woodstock.
Who do you call Woodstock?
Cathie Wood stocks.
Oh.
Woodstock.
I see. All those stocks. Well, that's, yeah,
Woodstock. I mean, why not? That was like an unbelievable concert.
It was.
Yeah, well, that's Woodstock.
It was in Bethel, New York, not Woodstock, but yeah.
No, wait. Max Juergens. No, stay focused.
Sorry, I am focused. I'm focused on Woodstock.
I just think I'm not making, look, she's obviously got a beat on things. But when she said, Carl, and another thing I don't approve of, is she used a lot of the stocks I regard as incredibly volatile in the NASDAQ. She uses as what she called, but basically what cash equivalents.
So let me explain, for those of you that don't understand, what ARK will do, rather than just having cash sitting around, they'll invest in more established tech names for a little bit more stability, the likes of Amazon, Google, Facebook, Apple, these kind of companies. And when there's market downturns, say for example that Tesla gets absolutely crushed, maybe Tesla's down 20% in a week and Amazon's down 7%. Well, ARK can sell some Amazon, buy Tesla, and benefit by stronger recovery in that stock. This is a really smart strategy. Jim, of course, is about to cherry pick a single example and poke more fun at Cathie Wood. But this is a really smart strategy from ARK Invest. This is something that I personally did myself. Many years ago, I owned a bunch of different stocks, the like of Netflix, Nvidia, etc. I also owned Tesla. That was still always the largest position in my stock portfolio, always over 80%. But I thought to myself, if Tesla does literally nothing or worse, comes down, wouldn't it be handy to have some investments in some other stocks that are probably going to be up so I can harvest those profits and buy Tesla even cheaper? Exactly. And I did exactly that. In fact, I made a video about this. If you're curious, you can search on my channel for I sold a bunch of stocks to buy more Tesla, and you'll see exactly what I owned, what I sold, and the returns. I even have a Google spreadsheet that's still updating live to this day to show what would have happened if I kept those stocks versus buying them. This is a smart strategy. I mean, there's nothing wrong with it whatsoever. I don't understand what Jim's issue is. I really, really don't.
I mean, I don't know. David is. I could easily say that right now Facebook is cash equivalent, and I think you would say to me, Jim, you've lost your mind.
Jim?
Go ahead.
Not yet. You haven't. I'll let you know when it happens, Carl. I'll let everybody know when we're really fully
Ring Central cash? Is Ring Central cash equivalent? I have them on tonight. I'll ask them if they're cash equivalent. They're down 37% for the year.
So let's get a little bit more perspective and listen to what Cathie Wood recently had to say about the downturn in tech stocks.
It has certainly been an exciting, I guess you might say it that way, 4 months. We've seen almost a full market cycle in almost 4 months when it comes to certain strategies. We did get the proposal, the tax proposal. It includes an increase in the capital gains tax rate, the top rate, the very top rate, going to 43.4%. And I believe right now that's 22.8%. So quite a big jump. And because of that proposal, I think we've seen a lot of the high-flying stocks, the ones with very significant gains during the past year and a half, those I believe were hit hard because of that proposal. Rarely is the capital gains tax rate put in place, or a change put in place retroactively. So I do think investors jumped the gun on that one, understandably. I doubt we're going to see anything near that rate. And in fact, I am wondering if we're going to see much in the way of tax increases, as I just mentioned.
I completely agree with Cathie Wood. In fact, I'm going to say it now. There is no way in hell that the full capital gains tax increase is going to happen. It's absolute insanity. It would literally destroy the United States economy. In honesty, I think the Biden administration is just pandering to those dumbasses who do not understand how capitalism works, who think every billionaire is a rich, greedy person and they should pay more taxes and so on and so forth. I don't think there's going to be much of a change, but Cathie points out the market panicked ahead of time and overreacted. That's why we're seeing such a huge sell-off here. I think she's on the money here. I don't think this is a long-term thing. I think once there's a little bit more clarity around what will actually happen with capital gains tax rates, I think the market's going to settle back down.
On the economic indicator front, now we still believe we're in a V-shaped recovery, and that there will be nothing getting in the way in the short term. In fact, businesses continue to scramble. They cannot keep up with what's going on out there. We're fascinated to see that the two top performers this year are energy, up 40% year to date, if you can believe that, and financials up 27% year to date. And if you look at innovation type strategies, the kind of hit they've taken here, from the peak in the middle of February, many are down 30 to 35%, which is quite a hit. Now, as I said earlier, I think exacerbating that hit has been the threat of a near doubling in the capital gains tax rate. So innovation-oriented strategies would be hit hardest by that.
So I hope this video has given you guys and girls a little more perspective and explained exactly why tech stocks have been recently selling off. I just cannot fathom how short-term Jim Cramer is in his thinking. Now, look, I'm not here to hate on Jim. I understand that most of his audience are short-term dullards who like to trade in and out of stocks and make a 1% profit, lose half that to capital gains tax, and think they're an absolute genius in the stock market. But the fact that he's directing these comments and attention toward ARK Invest and Cathie Wood when they've been slaying it boggles the mind. Let me know in the comments below if you guys have been picking up any bargains during the recent downturn. As I mentioned in a recent video, if I had any cash, I would actually, I'm lying. I have a tiny bit of cash, and I may or may not have recently purchased more Tesla stock. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like up to $250 in free crypto bonuses with BlockFi, use the link in the description. You can also get 2 free stocks with WeBull and a free stock with Stake, also linked in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.